What's up YouTube, it's Louis here, hope you're all well. Today we're looking at Quant on the daily time frame, and Quant did actually close a daily candle under the 200 daily EMA. Of course, as you can see, it looks like in the coming days, if we don't get ourselves back above this bull market box, I'm going to have to flip it into a red box unfortunately, but you can see what's about to happen to the 20 and the 55. They're dragging down. That means that they could be forming a bearish cross if we do not reclaim this bull market box, which would be a nice reclaim of the 55 and the 20. A little bit higher at 155 would be the 20. Get above that and we've got this bull market continuation. Right now though, all you're doing is coming up to previous support as resistance. So of course it's amazing the pump we've had from this bottom over here. Look at that, we're from the close to current price 20% up, almost 30% up earlier today. However guys, we need to remember that this is resistance. You see to the left it was resistance, wicks going up, here coming down. So when we got above it, you can see we have wicks going downwards, here up, here down. So that's a signal we want to go up. This is a call that I gave you, a signal that up here where I told you guys this is the most likely area that you want to take some profits from Quant, expecting that it would come back all the way to the weekly bullish cross. We have retested that. We did close below on the daily time frame, but again guys, it's all about the weekly close. If we close a weekly candle above this area, that is amazing, but again, if we're not above this green box, then I'm not too confident that we will continue up. It's all about reclaiming this green bull market box, essentially that $150 psychological level where I was able to give you back in the past. I was telling you over here in December, January, if we ever lose $150, as it's a psychological level, you can see pretty much is there's a gap all the way back down to around $70 over here and eventually down to $40. That is definitely a possibility. If you remember correctly, I was telling you guys that the bears would potentially be saying we could do this continuation to the downside, because if we're not breaking above this is just a lower high, and technically that's what should really happen. A, B, C, awful bear market. But I've spoken about it maybe twice, 3 times, a handful of times on the channel, but obviously it's not something that we are expecting. That is only, I've already warned you guys about it on today. I've been non-stop on Twitter today, so I urge you all to follow me on Twitter. Make sure you're subscribed here, of course. We're trying to hit 5,000 subscribers as quick as we can, so make sure to share the content out. But the best place to do so, the best community, is over on Twitter. Make sure to follow my Twitter is Louis_crypto, and we've been doing hundreds of updates over the last 3 days, whether it was at night or in the day, especially today. Haven't had a moment to stop, and only now I was able to make my updates for you guys. So yeah, again, going back to the daily, weekly, see a weekly candle close above the 55, $122. Yesterday we closed a daily candle below that, so you at the moment invalidated this $400+ target up here for the inverse head and shoulders, as you need to be above this neckline to validate that pattern. And because we closed below, if we zoom in now, because we closed below the pattern's neckline, it means that it's invalidated unless we reclaim it. Now, of course, we've got 7 hours of the day left. I know we almost pumped 30% today, currently up 20, which is unbelievable if you, of course, bought from here. But you need to realize that all you're doing is running to what was previous support, as I showed you over here, but now as resistance. So it's all about reclaiming that box. If you're not getting back above this box, then it is resistance. We should head to support the next level down. If we don't reclaim 120 in the short term to head to here, even if we do head to here, which we're seeing, it's an expected rejection zone. So now you need to see the daily candle close consecutively holding back above the 200 daily EMA, which is the head and shoulders neckline, the inverse head and shoulders neckline. But unfortunately, guys, if this is flipped into resistance and the 200 daily EMA does not hold, it's back down to 83, and if that's not holding, it's back down to 50. So that is how that potential awful scenario could happen. I'm going to get you some fibs to find you the strongest of supports, but it's literally around 83. We'll double check that with you guys. So it's anywhere between 74 and 92. It is directly in the middle where we had this support, where we had this incredible bounce twice. Yeah, this is that range low. So we reclaimed that range and confirmed its support. So I can actually drag this down now a bit more over here. So it's a big area of support. The two outer points are levels, but also this midpoint, which is that specific point range low there. These are the three supports, I guess, so to say. These are all lines where you could bounce from here, you could bounce from here, or you could bounce from this one. This is an expected place to hold a support. Again, that's if we're using this area as resistance, we're just correcting into it and expecting continuation down like this. If we hold this level, as we've now run into this green zone, if we can actually hold the purple line and reclaim this green box, that's how we get back up to here. But until we see, you know, the days and weeks need to go by now. Everything is step by step. I've always been telling you, everything's step by step. Nothing is confirmed. So when we close above this, it's saying this is your target. We should be heading towards there unless you invalidate it. Yesterday, right there with the close, you closed all the way down here around 105. Around 105, you invalidated the play to $400. But if we can reclaim it as you see today, technically it's valid again. But I must warn you, all you are doing, although you might reclaim this and validate the $400 target, we need to realize there's key resistance up ahead. Forget the EMAs, the $150 bear market level. I'm going to have to flip this to red for now, guys, to be honest. Until we reclaim it, I'm going to make it red. If we reclaim it, I'll make it red, simple. But if I can actually select it, stupid thing. Here we go. So as long as we're below it, yeah, this is going to remain red. I just wish I could actually click this. Sorry, guys. Red. Text. Red. Bear. Change it to bear. Please do like this video. Of course, subscribe if you haven't. 50% of you are not subscribed. Every day it says over 50% of you are not subscribed. Please, if you were, we'd be at 5,000 so far. So again, do the job for the algorithm for me, as I do make videos for you guys every day. We're running, there you go. It looks much clearer now. I've made it red, can you see? But nothing confirmed. We've got 7 hours left. Close below the $122. I think that's what the weekly 55 EMA is. So if we see a weekly close below the 55 EMA, which is exactly in line with the inverse head and shoulders neckline, then we know we're going to expect this further downside to the $83 support, specific low of the range. However, it could be anywhere between 74, 83 and 92. Those are the specific points. You can see consecutively weekly holding this on the weekly time frame. You can see for over here, over a month over here, holding it exactly as support, not seeing weekly candle closes below that. So that's the top of your range. At first, that's where you should expect the bounce. So this would be for a good opportunity for short-term trades. This is only going to happen again if we're seeing eventually a weekly candle close below 122. But if you're seeing this happening on the daily time frame where we're closing below this green line again, then yeah, that's essentially where it should be heading, because you've invalidated the upside target, so it's not expected anymore. But if we do see this reclaim of it today, we're just running into this resistance. So the next step, let's say we close as is right now, we're closing there in 7 hours. The next day we need to hold this as support and then break above this bear market box, confirm that support, then we're good. Essentially, I hope that was so clear for you guys today. I know it was a bit long, but if you want me to teach you all of this, my course is currently 50% off at the moment. That just private message me over on my Twitter, Louis_crypto. Please, I urge you all to at least follow me over there to be kept up to date, because I have been constantly posting updates and helping people throughout the last night, the last days, and especially today. Thank you guys so much. Again, head over to my Twitter, Louis_crypto. Let's help get that to 2,000 followers. I'll catch you in the next one. Like, subscribe, and comment, and peace.